For more on China's property market, I'm joined by Eric Schmidt, live for us from Singapore. He is founder of China Entrepreneurs and CEO of Bank. Thank you for joining us. Eric, so data from the National Bureau of Statistics said new home sales rose 40% in China in the first 8 months of this year. What's been pushing the drive to real estate?
It's actually a factor of two things. First, I think, as your reporter just mentioned, easy access to credit has been much more prevalent this year compared to in years past, where home sales and property market has been down for the last couple of years. Obviously, China's push for urbanization is a huge policy factor in decisions that are made, and really that's a factor for the easy credit. The second part actually relates to the overall investment sort of portfolio that is accessible to local Chinese. Most people are not able to actually invest overseas. There's regulations that prevent people from investing overseas. Recent peer-to-peer lending regulations have limited the amount that people can lend online and the returns that can actually happen, which was obviously spurred earlier by recent fraud cases. But those two things have certainly made a push back into the real estate sector.
Okay, well, all of this demand, of course, is having an impact on prices. We saw the average prices in 70 cities rose an annual 9.2% in August, up from 7.9% in July. What do you make of the price gains, and where do you see prices headed?
So obviously, any price increase is definitely not good for the buyers. Most of the people are obviously new home sales, so developers are happy. But at the same time, if you look over the last couple of years, the developers have really struggled in China, and that really has created a challenge for building of new properties where, again, if you look at the local governments, they really rely on new land sales in order to fund budgets. So it has several, effects down at different levels of the economy. But over the next couple of months, I think, we'll start to see a sort of, a cooling off a little bit of the prices as sort of, demand has really been high. There's some, I would say, decisions that will be made over the next couple of months that we're expecting from leadership.
Right, Eric, because we saw the city of Hangzhou recently announced it would begin restricting home purchases. Do you think that's a good idea to sort of cool down the market a little?
So many cities have tried many different things over the last few years in order to bring prices down. Some have had more success than others. I think in many cities, governments have really tried to restrict buying to first-time home buyers. And this has created, obviously impacts that have not necessarily been intentional. For example, in Shanghai, there was rumors that this was going to happen, and actually the divorce rate actually went up over the last couple months because actually people thought that if they got divorced, they could go buy 2 properties instead of 1. So again, not necessarily intentional impacts have made things a little bit more difficult for people to buy homes. But again, over the last couple of years, many things have been tried by local city governments to try to cool things off. Some have been more effective than others. In this case of Hangzhou, again, obviously for the locals in Hangzhou who are trying to buy property, it is a good thing for them. But again, for a lot of the people who are coming in from out of town, who are urbanizing, it is a restriction to them on how and where they can buy their, first properties.
Right, so beware of the unintended consequences. Well, I want to talk very briefly about the housing debt that you mentioned earlier, the easy access to credit. Is this something that we should be worried about, just the fact that there's so much debt right now? Should government officials be concerned about that?
I think they're already looking at this. Certainly the initial intention was to spur, obviously, home sales, and they certainly accomplished that. So again, that's sort of where over the next probably, again, couple months, we'll hear some decisions. But, if you look at the overall amount, I think, is it concerning? Yes. But again, sort of people have been saying that for many years. Where is that really that red line where the government is going to say enough is enough, and, we're going to sort of, put a hold on it. The challenge is obviously economic growth in China. The recent GDP numbers have been down, and certainly in places where GDP is even further down, in the Rust Belt area of China, has had an even more impact because a lot of the construction materials is actually, built in factories that are in the Rust Belt. So again, if you further slow down the economic sort of situation for the real estate, that obviously has unintended consequences upon the construction market and certainly building materials.
A tricky balance. Thank you so much. That was Eric Schmidt, founder of China Entrepreneurs and CEO of Event Bank.